morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Well, Indian equity markets are set for a cautious start ahead of RBI Monetary Policy outcome. The central bank is likely to maintain a status quo, but the commentary is watched. Volatility due to the weekly expiry of the Nifty 50 option contracts at play. Talk about the global setup. Global equities climbed to more than 2-year peak. S&P 500 closes at a record high. Strong earnings essentially in US has essentially offset the US regional banks, China market jitters. Moody's downgrades the New York Community Bancorp to junk. Now, this citing pressure on Bancorp's funding and liquidity. Let's talk about the US futures. Very little. They were unchanged rather in early deals. Asian markets, they've edged in higher as S&P 500 sets in new record. Now, market in China will be again in focus as investors prepare for the last day of mainland equity trading before the Chinese New Year holidays. Back home, all eyes will be on the last leg of Q3 earnings led by India Inc. Talk about FII data. They've sold shares worth around 1,691 crore and DIIs have purchased equities to an extent of 327 odd crore. Earnings that we'd like to watch out for: Grasim Industries, importantly, Life Insurance Corporation of India, Power Finance Corporation, Zomato, Biocon, Aarti Industries, Apollo Hospitals, Balrampur Chini, BEML, India Shelter Finance Corp, Patanjali Foods, Thermax and Torrent Power. These are going to be some of the names that we are going to be looking at. Of course, it's going to be a very important day and it's going to be divided into two halves. Post policy impact will last for 1 hour less unless something big comes out, and market is going with an expectation of rate, essentially no stance coming in on the rates per se. But we're going to be talking about that in just a jiffy. We'll lay out all the expectation there right for you. Essentially, it is the day where PSU stocks will be eyed after the PM's endorsement there. Prime Minister has put his personal brand behind PSUs. There is still a lot of disbelief in the PSU rally, excluding rail and defense. PSUs, the entire pack is still undervalued. LIC, for that matter, also trades at half of the valuation of its peers. But that's that when it comes to the trade setup. Let's go across to Osho Krishan, Senior Analyst, Technical and Derivative Research at Angel One, to understand about the strategy one can look at today, immediate Nifty levels and Bank Nifty levels that viewers can work with. Morning there.
Very good morning, Nikki. Thank you for having me at your show. Well, now coming to the view on Nifty and Bank Nifty. Well, Nifty being the first or the benchmark index, we are witnessing a very indecisive movement in Nifty from the past one and over 2 weeks. But overall, if we will be looking on the technical front, then on the higher end, 22,000 and 22,100 is the zone where we are witnessing some kind of cool off or where people are getting their positions lighter. So still now we are expecting that as we are opening slightly on the positive note, so we are expecting that 22,050 to 22,100 on spot levels should be acting as the first resistance levels, and one should not become very much complacent with the opening bell. If there will be any kind of dip towards the zone of 21,900, that should be auguring well for the buyers. Because if I will be talking about the derivative front, then on the lower front, put writers have taken good positions on 21,800 and 900 strikes, and on the higher end 22,100 call writers have taken a decent positions, while a positive development has been seen that 22,300 call strikes has also seen some kind of traction in the recent period. So overall, we are expecting that the intent for the market is to go upwards, but we have to be very much cautious ahead of the RBI monetary policy outcome. Although we are expecting a status quo, but if there will be any kind of surprise in the terms of commentary, then that can trigger a very positive trigger for our market. Now coming to Bank Nifty still struggles below the short-term moving average on the daily time frame. 46,200 is the zone which is acting as a very strong resistance zone for Bank Nifty. So until we witness a breakout from above the zone of 46,200 on the higher end, we should remain sidelines on the Bank Nifty, but overall PSU banks are performing very well. So despite some sulking from the private sector banks, public sector banks are performing very well. One should definitely try to accumulate the momentum from the PSU banks like SBI have given a breakout. Canara Bank is looking very positive. Bank of Baroda is looking positive. So there are many names on the PSU front which is still looking positive, and one should have a stock specific action instead of
Sure.
sector or instead of index movement for
Osho,
today's
sorry
session.
to interrupt you there. You mentioned three PSU names, but just give us one particular pick within the PSU space before we go and address the markets open. Quickly there.
See, overall, if I'll be talking about, then Canara Bank is looking very positive. Canara Bank has started on a positive note, but if there will be any kind of dip towards 555 odd levels, one should definitely try to accumulate. 570, 72 is the immediate target that one can expect for Canara Bank.
All right, point well taken. Let's address the market open there for you. Let's just see how is the start panning up for market open. We are looking pretty much at a cautious start, but let's just see if that's what has been shaped up. We are yet waiting for the updates to come through. And looks like it's mostly the global, at least, handover suggested of some amount of fair bit of optimism there. But of course, it's going to be that classic case of wait and watch method that could come in. NSE perhaps is taking a little more time to update it and showing those numbers. But there it is on your screen. We have opened an actually positive with fair bit of gains, I would say. 0.3% clocked in early deals, 21,981 mark. Roughly around that, flirting around that 22,000 mark thereabouts. Bank Nifty, let's pull that up just to see. Well, it is a good start even for Bank Nifty. Also do bear in mind the fact that it's a weekly expiry. We're also going to be seeing or witnessing some amount of volatility playing on account of that. 0.4% clocked in on Bank Nifty, mid cap and the small cap. A bit of outperformance coming in from that one. But what really is interesting in today's session will be the Nifty PSU Bank performance. Let's pull that up. And apart from that, we are also going to be looking at the metal. Look at the gains coming in for the PSU banks, right? Almost more than 1% clocked in early deals. Clearly, some sense of optimism that the market is anticipating from this RBI monetary policy. Of course, we are going to be talking about it in just a bit. Top gainers and the top losers, just to see how the trend has been stacking up. And then we'll go straight across to Osho. Power Grid, which is reported in the numbers, of course, BPCL, M&M. These are some of the top gainers that we have. Apart from that, HCL Technologies, NTPC and SBI. There it is on the list right now. Top losers, let's look that up. IndusInd Bank, Tech Mahindra and Cipla also are some of the other top gainers that we have. Market red clearly in the favor of advances, 29 advances versus 21 declines. Tata Consumer Products, ITC and Nestle India. Well, Tata Consumer Products too has reported in the numbers. Nestle India, another one. It's the bunch of FMCG pack actually, which is dragging down the index a bit lower. Adding to it is a bit of financial pressure there. Bajaj Finance and Axis Bank along with Maruti Suzuki. Well, these are the some of the losers that we have. Let's go across to Osho right now and check with him his view on LIC, which is going to be reporting in the numbers today. Let's figure that out and the charts there. And also, what does he make out of Power Grid, which is a top gainer and also has reported in the earnings today?
See, firstly, LIC insurance company has seen a very drastic up move. There has been no correction or midway breather that can be seen in this counter. Once it started its rally from the zone of nearly 650 odd levels. But looking at the overall setup, it still looks very positive. And because it is hovering just above the 21 and 20-day exponential moving average on the daily chart. So until it remains on the higher end, we expect the positive momentum to continue. But one should not be very much aggressive because the parameters have overturned to be very overbought. So on level specific front for today, the lower levels of the bullish gap is something that one should keep their stop losses to, which nears to 1050 odd levels. And on the higher end, 1120 is the immediate target that one can expect. But overall, the sentiments is still positive and one can even keep their holdings in this counter even for medium-term perspective. Now coming to Power Grid overall has seen a very strong traction. It has taken a breather for 2 days and again is witnessing some kind of positive movement for the day. So one can definitely try to gauge the momentum because the trend is definitely positive. So with yesterday's low as a stop loss, one should definitely try to buy this counter on the higher end. 288 is the first target that one can expect. On the lower levels, near to 265 to 268 should be acting as the support zone.
Osho, completely running out of time, 30 seconds on this one. State Bank of India, you've already spoken about Canara Bank as one of your top picks within the PSU space. But State Bank of India, one of the top gainers today itself, what do you make out of it? Immediate support and resistance level along with the strategy.
Yeah, again, this counter has given a breakout, so we are expecting the momentum to continue. On the lower end, immediate basis, 665 to 670 should be acting as the support zone. On the higher end, 685 should be the first target or the first resistance, but it is near to the same levels. So after 685, 700 is the target that one can eye for in SBI.
All right, Osho, we're just going to leave it at that. Thank you so much for taking out the time and having this conversation right here with us.
Thank you.
Equity markets seem to have factored in the possibility of no change in the repo rate as the Reserve Bank of India is likely to hold the rates at 6.5% for sixth consecutive time in the Monetary Policy Committee meeting on Feb 8. But let's understand what is behind, what comes next, what kind of stance are they looking at, what kind of measures one can expect. To answer all those questions and more, we're being joined by Krishan, who's the editor, banking and finance at Moneycontrol, right here in the studio. Morning there.
Thank you, Nikki, for having me on the show.
Pleasure, pleasure. Let's start off with the basics.
Yeah.
RBI Monetary Policy is likely to be stayed, but what comes next for us in that matter?
Well, Nikki, as you very rightly summarized, a status quo is pretty given at this point as far as the rate is concerned.
Right.
And even for the stance, I would imagine that the central bank wouldn't go to change the current stance, that is withdrawal from accommodation to neutral at this point. Rather, they may wait for more inflation cues and look at shifting to a neutral stance maybe in April, June. But having said that, it's not about the status quo or what's that is going to be largely known even today. I understand that if you look at from the last policy, that is the December policy, and now, three critical things have happened. One is we have seen a budget which has given two key positive signals to the monetary policy makers, that they have a lower budget deficit number, fiscal deficit number, and there is a lower borrowing target. Both these are very positive for MPC, the rate setters, because these are disinflationary. A lower deficit always helps in bringing down the inflation. So, and the second part is that if you see the December inflation number at 5.69, this has come much below the, a tad below the expectations. Again, it's a positive thing. Thirdly, the core inflation part, which is a very critical. Core inflation is the non-volatile part of the overall inflation, the non-food, non-fuel part. That is also has come down significantly to about 3.8% from about over 5% back in 2022 and till mid-23. So if you combine all these factors, the general sense is that the RBI-led MPC is gradually progressing to its medium-term target of 4% inflation. That is the target. 2 to 6% is the band they are targeting, but the inflation target is 4%. So they are probably walking towards that target, which would mean that we might see a rate cuts later this year. And if you see a shift in stance from withdrawal from accommodation to neutral in April or June, that would mean that a rate cut is not far. So there is an overall optimism as far as the rate approach of the MPC is concerned. People are expecting that the current rate hike cycle is over, and now we are getting onto a rate cut path. Probably that explains why the markets are also enthused about today's monetary policy.
Point well taken. Also, PSU banks have been doing exceedingly well after FM, comments also. That's one bit of it. But of course, two things that I'd want to understand from you. You also spoke about perhaps no change in stance coming through in this monetary policy. So anything there, of course, will lead to only an upside move coming in for the market participants, because it's not really factored in from what I gather. But I'd like to understand, do you expect any revision of GDP growth target anytime soon, or for that matter, tweak in the inflation target?
So your first question on stance, like I already explained,
April, June is when we can look at that.
Yes, I already explained that. This monetary policy stance is a key indicator, a key signal to the markets that what is the thinking within the Reserve Bank of India. A stance that is geared towards withdrawal from accommodation means the MPC is not considering a rate cut. So before we see a rate cut, we will definitely going to see a shift in stance to neutral, right? So if that happens today, that would be a big surprise. They have the reasons to go for an early shift in monetary policy stance, but I would be surprised if they are doing it today. But certainly by April, June, we should see that happening, and which will be a prelude to the rate cut. That's one. As far as the growth is concerned, yes, overall, see, if you remember the last policy, the RBI increased the GDP forecast for the year from 6.5 to 7, which was a sharp jump. I understand that the governor also in Davos recently, he said that for the next fiscal also, the RBI is now sort of working with a 7% GDP growth force target. I don't expect a sharp revision upwards. As far as the inflation is concerned, yes, there is a possibility that it can come a little lower than 5.4%, which is the current projection was as in the last policy, for the simple reason that core inflation is easing substantially, and there is an expectation that essential food items, vegetable prices, etc., may see a breather going ahead. So inflation forecast lower, yes. Growth, I don't think there's going to be any major change as such at this point.
All right, point well taken and well explained there, Dinesh. We're just going to leave it at that. And thank you so much for taking out the time and joining us here in the studios.
Thank you.
But coming up next, we have also an extremely interesting conversation around the whole PSU banks. What kind of sector rally are we looking at? Themes that you need to keep in mind ahead of the big trigger, which is now general election, and of course the interim trigger, which is RBI Monetary Policy. But to answer all those questions, we're being joined by Rahul Arora, who's the CEO at Nirmal Bank. Morning there, Rahul. How are you doing?
Good morning, Nikki. Thank you for having me on the show.
Pleasure is all ours, and sorry for all the wait that you've had. Let's straight up first ask, what's your assessment? What's your expectation? Yesterday we had big comments coming in from the PM, of course, for the PSU rally that we've seen. A bit of endorsement, I would say, given the performance that they also noted in the last 10 years, significant improvement there. What do you like within that space? Any picks and the valuations? What do you think about that?
So I think as a basket, Nikki, these stocks have gone up many-fold. So I think I don't personally think that you're going to get any significant returns from here when you look at PSUs as an aggregate, because I think some of these guys have gone up anywhere between 5 to 10x in the last 18 to 24 months. So I think when you're investing in a PSU company today, you need to have very moderate expectations over the next couple of years, because I'd be extremely surprised if they outperform the broader markets. Having said that, I think PSU banks still present a reasonable opportunity, because I think when you talk about PSUs, a lot of things in railways, defense, railway financing, and a lot of those kind of things have done well, but PSU banks necessarily have not. So if you look at a Bank of Baroda or a State Bank of India, for example, they have about a 16% and an 18% return on equity respectively. And they're trading, I think SBI will probably be trading at 1.1 times price to book, Bank of Baroda at about 0.9 times. So I think for those kind of leverages and the fact that asset quality concerns are a thing of the past, intuitively, and I often say this on a lighter note, that it's one of life's greatest mysteries as to why they trade at the valuations that they do. Because the world is so different today than it was about a decade back when you had corporate NPAs. So, 1 year out, could these PSU banks, specifically Bob and SBI, be 30-40% higher? Possibly, but on the rest of the PSUs, I'd probably be a little cautious at this point.
Also for LIC, which now trades at half the valuation of its peers, SBI, of course, also like you suggested, you're a little bullish on that one. It's got no logic to trade at 1/3 valuation of ICICI Bank. And also a lot of disbelief within that PSU rally, right? Excluding rail and defense, what do you really like?
So, like I said, Nikki, it's only banks pretty much in the PSUs. There's nothing else that I would touch. I think if you look at something like a Power Grid, it's a fairly regulated ROE business. So you'll probably get that 18-20% kind of return on equity. But like I said, apart from that, I'm not so certain that, the PSU basket will outperform, as the Prime Minister in his speech himself said yesterday, that, the index itself is up 2x in the last 18 months or so. So, to make a significant case for re-rating here, it's going to be earnings that drive it. So in PSUs, like I said, the only thing that I'd probably be comfortable touching is PSU banks at this point. And within that, I'd have more comfort sticking to the two largest names in the country.
Point well taken. Let's speak about large cap stocks. At the start of the year, there was this whole narrative and the conversation being said that probably now the value is within the large cap names. But look at the valuations, especially the most valued ones have started hitting in all-time high level. Do you still find that particular space very attractive? And within that, which are the themes typically that you are keeping on your watch list?
So I think definitely when you look at the market as a whole, there is more value in the large caps as compared to the mid and small. I think there are huge excesses in the mid and small cap indices. And I think, Nikki, what worries me is the spate of NFOs that are still coming out at this level. And I think, unless you have a 5-year view, if you're putting in money into an NFO today, I think you're going to land up losing money. And I think, I think it is a fiduciary responsibility for everyone in the market not to just keep milking, when things are going up. I think it's equally important to highlight the risks, and I don't think too many people are doing that adequately. But having said that, as an asset class, I would certainly prefer large caps. The index, the bank Nifty has not really re-rated in a very material way of late. I mean, if you look at ICICI Bank's last 3 or 4 quarters numbers, they have consistently beaten expectations, but there has not been too much of a re-rating on the way up. So I personally think that banks could potentially be one area where you could look at. And within that, I think something like an IndusInd Bank looks interesting. Consumer is struggling, Nikki. So I think there will still be fund allocations that move away from FMCG into IT. Because remember one thing, everyone was talking about a US recession last year. The chatter has started again this year, but it doesn't seem to be on the horizon. So if that doesn't happen, then I think IT could land up being another pocket. So I think the large caps predominantly will be driven by these two. And I think because of the government's thrust on infrastructure over the last couple of years and a lot of projects coming on stream, I think the third large cap sector I'd probably bet on would be cement. So I think these would probably be my 3 overweight sectors if I was looking at large caps. And if you want to go slightly more defensive, maybe you can add a pharma in.
Okay. I was chatting with one of the fund managers there, and they said that IT and pharma perhaps are just reversal to mean and not something which has really value to it. For pharma, what's the understanding? What's the logic? Why are you so bullish on that?
So I think for a lot of these companies, Nikki, whether it's consumer, IT, pharma, at least consumer and IT, I think they have matured to a very large extent. So I think expecting a structural double-digit top-line growth may not be the right way to play it. I think for a lot of these companies, margin expansion is the way that they're going to get re-rated. And that's, you've seen that in the case of Hindustan Unilever over the last 1 decade or so. In the case of pharma also, I think if you look at raw material prices, they've come off substantially. So I think between FY23 reported and FY25 or FY26 actuals, depending on where you're valuing the company, most of the pharma companies will give you 300 to 500 basis point expansion in margins. There's also a lot of patents that are going, getting into expiry in the US. And I think for a lot of Indian specialty players that have made investments in those markets, Sun Pharma, for example, they stand to benefit from a global perspective. But I think what we like predominantly as a space, Nikki, is domestic pharma companies. Names like JB Pharma, Ajanta, Alchem, which have invested a lot in domestic capabilities, domestic therapies, and are showing good growth as a result of that. So I think barring a Sun, which has mastered the art of the specialty business, and maybe to a lesser extent a Cipla or a Reddy's, I would not be too gung-ho about a lot of companies that have global presence. I would probably predominantly be focused on domestic pharma companies because that's where I see volume growth. But like I said, even in pharma, I think the big story or the big valuation reset is going to come on the basis of margin expansion, which will probably make you see about an 18-20% kind of growth in most of these pharma companies that will give you that kind of margin expansion.
So within the pharma space, what do you like? 3 names put together based on the valuation, of course, in the pecking order.
So I think Sun Pharma, JB Chemicals, and maybe an Ajanta. I think these would be 3 names.
You also spoke about HUL. Let's scratch that a little bit more from the surface, from where we've seen it's one of the biggest FMCG company, and the other is, of course, the country's largest paints company, Asian Paints. HUL and Asian Paints put together, both have wallowed in the list of companies which have seen the maximum downgrades from the analyst community over the last 1 year. With that being said, how do you look at the consumption story? How bullish are you? Which are the picks that you like within the space?
So we'd be underweight consumption, Nikki. I don't think there's anything that we would recommend buying at this point. I think volume growths are disappointing, and I think the valuations that we're paying for these volume growths are a little tricky. That being said, I think if you must make an investment, I think foods is where you need to go. So you could make your pick between Nestle, Tata Consumer, and Britannia. I think structurally these are good names. They're in very interesting product profiles. But like I said, I think, to expect these companies to be growing at 10-12% in the near term may be a bit challenging. So I think you're best staying underweight. If you have to play consumption, I would look at consumer discretionary, maybe QSRs, maybe hotels. So I think those are probably places where you could land up making money. And I think some of these have done remarkably well since their COVID lows. But between consumer staples and consumer discretionary, I think the tilt would certainly be towards consumer discretionary, because I don't think the earnings growth are going to support the valuations. For an FMCG company to get re-rated from here, I think either they need to show very sharp margin improvement. I think the bulk of that is behind us, or they need to get back to 10-12% kind of top line growth, which again doesn't look like it's going to happen in the near term. So consumer discretionary over staples for me at any point.
Point well taken. It's also an important day. I mean, the next big trigger that the market is awaiting, of course, after the interim budget is the RBI Monetary Policy. Though it's expected to be a little boring event of sorts, but do you expect any kind of surprise perhaps to lead to that sharp up move for the markets, if at all? Any kind of expectations there, measures that you think could be out of the box, which perhaps has not been factored into the markets?
No, I don't think we're expecting anything on rates, Nikki. I think if anything, he'll address a liquidity deficit. As a house, we're expecting a 50 basis point rate cut between now and next March. I think the probability of that rate cut starting around September is pretty high. It'll probably be in tandem with what the US Fed does. But I don't think there's going to be too much by way of indication on rates also right now, because our own expectation for the next CPI print is about 4.9%. So I think if anything, he'll just talk about the liquidity and perhaps moving to a neutral stance soon. I doubt there's going to be anything that's going to cause the market to jump in a very material way. But then, it's the RBI. They're from time to time, they're known to throw a rabbit out of the hat. But I think it's going to be a fairly status quo policy with the focus pretty much being on liquidity.
All right. Last final question that I have is $2.5 billion market cap wipeout for crisis hit Paytm. It's in talks with the top officials, but what do you make out of it? Do you think people are better off with companies like this one? Also, your view coming in on the new age stocks, something like a Delivery, Zomato, or for that matter, Nykaa. Understandably different business model, but your view on Paytm and what do you like within the new age companies?
So I think, Nikki, the one good call we made as a broking house is we don't track any of them. And I think that's probably one of the best decisions that we've made, because most of these guys are trading at a fraction of what their 52-week highs are. Barring a Nykaa, which is showing somewhat of profitability, I think the others are just trades at best. I don't think any of them are structural investments. I think all of them have very significant listed peers that are giving you good cash flows and good profitability. As a space, I don't think I would be putting in money, especially not at a time where I think the risk reward in the market immediately is not favorable. So no official rating on any of these, and happy for that. But I think you need to find their listed peers that are giving you good cash flows and earnings and probably park your money there. You'll probably be safer.
And within the defense space, what do you like? You think most of the rally has already been captured or factored into the stocks, or you think there is further steam left to the rally?
So, Nikki, I actually have a hard stop, so I probably need to leave very soon. I'm sorry about that. I'm running a little over. But I think on defense, again, I go back to the previous answer that I said. I don't think you're going to get any material returns when you look at the next 1 year. I think these stocks have re-rated. If you look at a Mazgaon, for example, it's up 20x from the lows. I think too much has been factored into the kind of earnings, and I'd be very surprised if the returns are more than 10% per annum from here. I think I'd be surprised if some of these even beat fixed deposit kind of returns. So, if I was invested in a defense stock, I just take profits and move. I think the best is behind. We've seen that happen in the chemical space when COVID started. And, these trades get concentrated. It reminds me of real estate in 2008, so on and so forth. So for me, defense at this point, unless you're taking a 10-year view, which I don't think any investor in India is, I think at best at this point, at these prices, I would probably avoid them.
All right. Thank you for the time, Rahul. We're just going to leave it at that and let you go with all the other commitments that you've had. But thank you so much.
Thank you.
All right, Power Grid Corporation, that's the one that you need to make a note of. Revenue is up by 2.5% for Power Grid of Corporation. It's one of the top stock also gainer on the Nifty 50 list. Talk about the EBITDA, it's up by 3.5% for this one. And if you talk about the margin expansion to 88.4% as compared to 87%. So that's a sharp up move there. Net profitability is also shot up by 10% for this one. We have bunch of other names like Tata Consumer, which has not reported a great set of numbers. Apollo Tyres also a bit of disappointment creeping in for that one. So net, this is long and short when it comes to the entire earning profiles that we have, or stocks and news rather, that we have. But of course, it's a good start to the day and it is an important day. So do stay tuned in for more. But on this edition, it's a wrap, and goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.